All right. Hey, good morning. Happy Wednesday, the Wednesday before Thanksgiving in the United States of America, where I think they give thanks to college football. I'm not sure how the Indians fit into it anymore. But anyways, hey, good morning. Jambo. I hope your day isn't as difficult as a typical day. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Strategist for TradersWay.com. Thank you very much for being a client. And if you are new to these webinars and you're enjoying them, learning a few things, please show your loyalty and respect by visiting TradersWay.com and opening up a demo account so that you can test out our execution speed, get to know our customer service, get to see our spreads, try a variable account, try a fixed spread account, try an ECN account. And one day over time, by attending these webinars, maybe you'll gain the skills and confidence to trade real money. And if you get to that point, or when you get to that point, you will choose TradersWay as the prime brokerage for your new successful Forex trading business. Do these sessions 7:30 in the morning, Monday through Friday, here at Forex.Today. Yes, and MT5. So I'm okay with MT4. So anyways, let's get on with it. It's a holiday day. I think most of Wall Street will be skipping out, if not skipping the day entirely, skipping out early. So anything that's going to happen is going to happen at the New York Open and then for shizzle out. Okay. I miss my beard, don't you? Where'd you go, beard? So anyways, this is where we left off on Aussie dollar. This is a 5-minute chart. And we talked about range on the bottom, range at the top. There's sort of an inside range here. And if you were a bull, remember that whole conversation? Not predicting that it will be bullish because it's not bullish. Okay. But we had this conversation like, how do you get into it if you are a bull? Well, it was still on its way down. And I said, well, you got to identify support first. You don't have to be the first dude or dudette in the trade long just because you're a bull. You have to recognize that you're bullish, which may or may not be on the long run. See, in macroeconomics, you have long run and short run. So in the long run, you might be right. On the short run, these are not market conditions that are favorable to your bias. So you say, well, what are the favorable market conditions? And I said, well, Gagzeus, that's where technical analysis comes in. So that still looks pretty bearish, but you've pre-identified this price level as a place where you might want to buy. Why? Because it's monthly pivots. Fine. Going back to a 5-minute chart, this is what we talked about yesterday when we were, I think, maybe even here. That would be Monday, right? So anyways, we're down here, and I said, well, couldn't you at least wait for a double bottom and then probably a higher high, higher low scenario? Is that how you remember this? Did I set that up properly? We're at support. You don't buy it just because it's support. Now you got to look for a reversal pattern. A double bottom is a good start. A higher high after a double bottom is actually what you're looking for. The more conservative setup. Well, I said I said 3 things. I don't actually remember, but I can tell you I still think the same thing. It's a strategy. Again, it's like playing the piano. I know the song. I don't remember it yesterday, but I know the song. The song is, you can buy it here off the double bottom if you're aggressive, but it's better than just buying it blindly. Right? And then the next step is to wait for the higher high. so that you can look for a roll reversal back at support. Okay, a 50% 618 Fibonacci retracement at a monthly, weekly pivot cluster. That seems reasonable to me. It's within reason. You could consider that a 1, 2, 3, right? 1 at the double bottom, 2 at the higher high, 3 at the roll reversal. That seems like a reasonable roll reversal. Whether it's a 50% 618 pivot cluster, it's all the same to me. It's all good in the hood. So, right, that's the next assumption. And then the last opportunity is breaking this area, maybe give you this. So what we're talking about is, oh, I know. Somebody yesterday said, as a bull, aren't you obligated? I'm like, hell no. Who said that? You know what I mean? What are you obligated to do? Make money with as little risk as possible. Right? Basic calculus. What do you want? Profit, right, is a function. That's supposed to be an F. Is a function of what? Risk. And what else could we put in there? Profit is a function of risk and quality or setup or something. Risk and quality. Let's do it that way. So if profit is a function of risk and quality, what you want to do is lower risk, but then what does that force you to do on the quality side? To make it equal. Let's say if risk goes down by, lost my mouse. If risk goes down by 20%, then the quality of your setup has to go up 20%, right? So maybe you say, well, if you bought this just blindly because it dropped, you're buying a bottom in a downtrend. That's pretty risky. How about buying a double bottom in a downtrend? It's less risky. It may not be any better result-wise, but it is less risky if you're buying a double bottom at support in a downtrend than just simply buying a low in a downtrend. Then buying a double bottom higher high is then even less risky, so risk goes down, and therefore the quality goes up proportionally, right? Because you could say quality is equal to risk minus 1. Right? So if the quality is 80%, that's going to, risk is going to be 20, right? Minus 1. Then you move, you got 80 plus 20 is equal 1 if you do the algebra and move things over, right? So anyways, so you could qualify all this kind of stuff. So what I'm saying is, you know, buying a 1, 2, 3 after a double bottom at a level of support is less risky, better quality than simply buying a dip in a downtrend. Who buys dips in a downtrend? People that lose money fairly often. Who buys double bottoms in a downtrend? People that are assuming reversals. Who buys 1, 2, 3s after a double bottom in a downtrend? People that believe it has reversed, so on and so forth. And then maybe the next rally up, and you're now trading this move, right? So you have to decide as a risk manager now, what quality of setups are you looking for? Now, if profit is a function of risk, profit is a function, right, of risk and quality, then the higher the quality, lower the risk, the lower the profit. Okay? But the argument that I would propose to that is to say, okay, yeah, if you just bought the double bottom, you would make more money when we're up here. But if you do this enough, you're also going to be buying bottoms that can make lower lows, and therefore the higher the risk, the higher reward, but also the lower the quality, the lower the consistency. And, you know, someone that takes very high quality trades maybe makes less trades, but makes money more consistently than someone that makes more trades that are more risky, that has more losers as well as more winners. And you have to decide what the balance is for you. And then write a 49,000 page disclosure document so your clients understand exactly the calculus of your quality risk ratio. Okay. What the hell were we talking about? What? Oh, buy the 1, 2, 3 reversal. Yeah. I think we're all originally from South Africa, right, Ryan? Go back a million years or so. Yeah. What? Why are you guys still there? You know, like 6 billion people got out, man. Yeah. You're digging your tunnel in circles. This is the longest tunnel ever. Yeah. So anyways, yeah. This is something we talked about yesterday. This could have been your trade plan today. Yeah, okay. So that's all I need to say about that. And it's remarkable, even though this is all a random walk, it's pretty remarkable that it bottomed out at the monthly support pivot. Remember when you didn't use monthly pivots? Remember those days? Henley loves water. Yeah, when you get it. You guys ever leave yourself notes like this? You actually write it and then print it out maybe? It's not a bad idea. Love those pivots too, huh? Love those pivots. Really, Ryan? Well, you've missed a roller coaster ride. Oh, you were never in the Matrix? Oh, okay. Freeborn. Nice. Makes it tough to learn when you don't have an input port in the back of your cerebellum. You know what I mean? Like, I learned jiu-jitsu in like 10 seconds. It's taken you years. All right. I know jiu-jitsu. All right. Cool. I don't remember how much of this was guesswork. Do you? This seems very guessy to me. You know, I don't think you learn Kung Fu. You become Kung Fu. Okay? I don't know. I'm trying to remember the context here. I do believe we did this when we're at support. I think we were in this area here. And I drew it. We did a 618, middle of the range. I think there's something else to the left. This is a 5-minute chart. Wow. Wow. I think I drew this, all as guesses. Right? Is that true? Because this is a 5-minute chart. And I think it was building on the same conversation on the other chart where you might as well wait for a double bottom. And this is me drawing a double bottom. I remember it, that there would be bulls here and there would be bears there. Well, we haven't finished the path yet, right? So I said, I don't know what direction it's going to go, but I know this is where, like, at least bears would take profit and bears would re-enter, right? Cool. So once again, we don't know if that's forming, but isn't that like the basis of a trade plan? I'm trying to predict the future. I don't know what's going to happen. I don't know what other people are going to do, but I can understand their point of view. I can almost even empathize. I can't really. I have to fake empathy. And I tell my wife and children that. I'm like, look, you know I care because I'm faking my empathy. If I didn't care, I wouldn't fake it. I mean, right? By definition, that's pretty close to real empathy. Having the common courtesy to at least fake the empathy. I mean, come on, that's love. So in this case, I don't know what they're going to do, but I can try to understand that that's a good place, that support, so that someone's going to take profit there, and then it's going to try to rally up, and then I think a bear would sell this role reversal, 618 Fibonacci retracement back into here, and they're going to try again, right? But then the double bottom is going to present itself again. If it does, we don't know. But that's where a bear would get nervous. But also, isn't that what a bull is supposed to be looking for? At some sort of support. I don't remember why we have this as support. But at some sort of support, a bull says, well, I don't really want to buy it here. But if the bears wimp out, I sure would like either a double bottom or a 1, 2, 3. Right? Thanks, Craig. It's important to have a philosophy. Yeah. You know, one of the things I've been pondering, or at least trying to ponder, is what does it mean? Why? Why didn't the yen weaken? So traders are not leveraging. The data out of Japan's been pretty okay, I think. Right? The Nikkei should be rallying, the yen should be weakening. So that is much more important of a question of like, you know, I don't know, whatever. The trade itself is almost irrelevant. No, because these are business cycles, Mike. So I believe and maybe this is my flaw, but this has been getting me through the last 10 or 15 years of trading. I'm a businessman. I always have been. Okay? I was born with a cigar in my mouth, right? And I'm like, and white and old. I was old and white with a cigar when I was born, right? I'm like that angry baby, rah! Smoking cigars, drinking martinis. That was me as a baby, boss baby. Yeah, I haven't seen the movie, but I'm like the baby from Roger Rabbit, if that makes any sense. But anyways, perfect guy to go to Harvard. Great, another a-hole. Yeah, well, let him in. Yeah. So anyways, I think like a businessman. I can't turn it off. I'm an entrepreneur to the point that it's a flaw. Okay? But here we are, right? So I think like a businessman, and that is my interpretation of the market. Good or bad, right or wrong, it's confirmation bias. I get it. I'm smart enough to know that I'm drinking my own Kool-Aid, that at least I know I'm drinking my own Kool-Aid. Because then that makes me smart. Like faking empathy, is empathetic, right? I know I'm faking it, but I'm faking it because I think I should in this situation have feelings. So I know I don't have feelings, so I'll fake it, which means I must have feelings. Right? So anyways, the way I interpret the market is that things like when you are taxed moves the currency markets. That it's not just random walks. It's very logical. It's usually very simple things like, when do market participants go on holiday? When does the Fed make decisions on changing monetary policy? When, if ever, does the government change fiscal policy? When are businesses taxed? These are very basic questions, right? So it could be something as simple as that, where there was some sort of uncertainty in one of those points. Oh yeah, or when especially when you're talking about the peso, right? But that's a great example too. Thank you, Ryan. A very simple thing. When do you get, not even when do you get paid, when do you send it home? When you send it home is a function of when you get paid, right? Now, if you don't get paid because you don't have a job, then that trade diminishes. So now it comes down to, jobs for immigrant workers. When do they get paid, and when do they send it from Western Union, right? That gets you your peso trade. But these are all very logical steps, right? And you can think of that as part of macroeconomics. This leads to that, leads to that, right? Like higher prices of all goods, right? Rising GDP, right? Nominal GDP. Rising nominal GDP gives you a rising CPI. Rising CPI is rising prices. Rising prices makes the government change their monetary policy, raising interest rates. Raising interest rates attracts investments if they're higher compared to the rest of the world, ROW, right? The rest of the world. So if interest rates are now rising and higher than the rest of the world, it's going to attract investment. Attraction of investment by foreigners is going to increase demand for the US dollar. Increase of demand of the US dollar is going to increase the purchasing power parity of the currency relative to the other foreign markets, which makes dollar-denominated assets more expensive for foreigners, but makes foreign-denominated assets cheaper, so on and so forth. And that change, that nominal interest rate now, or the nominal exchange rate then changes the real exchange rate. The real exchange rate then, changes the demand for import and export, and then. Right? simple macroeconomics. So, for example, when you pay taxes matters. So, let's say you made $1 million, you have $1 million profit floating in your floating P&L. Okay? And let's say you don't think market conditions are going to change that much between now and the end of the year. Okay? Think about it now. If you take profit now, you pay taxes this year. If you take, right? So by this year, I mean in this year's cycle. So in February, you will owe the U.S. government, let's say, $400,000. You will get a bill. Okay? So that $400,000 will leave your bank account in 2018. However, if you hang on until the 1st of January and then take profit, you will owe the U.S. government $400,000 in April 2019. Which means you can take that $400,000 in the year 2018, play with that, make some money to pay for your bills that you'll get next year, and you know what I mean? So it's one of these things, like, if you can defer, you're going to want to defer, because that's everyone's tax strategy. You have to pay your taxes, otherwise you go to jail. That's why governments are pretty secure. Governments that can actually raise taxes. South Africa people don't pay taxes in South Africa, right? That's one reason they're poor. In the United States, if you don't pay your taxes, you go to jail, so they're pretty sure they're going to get their revenue. They can just walk in, take your house, and sell it. Right? That kind of stuff, right? So anyways, you can count on that. So long story short, it impacts the market. April 1st, right, is also an important day. It's fiscal year end for businesses in Japan. This is important to my logic. I don't know what the market's going to do in the future. I have no idea. But I know when these dates are, and these dates for some reason are important to me. And it's business cycle, it's logical, it's intelligent. Now maybe you come from an artist background like Ryan, and he figures it out with watercolors and bongos. Whoa! Caught a falling monitor. Look at that. Look out, falling monitor. So anyways, I don't know. I'm just bugging Ryan. Ryan's a good guy. It's his hippie parents you got to be careful about. But yeah. So I spilled coffee and everything. I got coffee on my banana. Ooh, this could be like an amazing invention. It's pretty good. Not if you're left-handed, Craig. Not if you're left-handed. Wouldn't that be careful? Wouldn't that be terrible? All right, children, today we are going to do drawing using charcoal. Now, how many people here are left-handed? All right, you children, you go sit in the corner and you watch all the other normal children do charcoal. You're like, what? That would be like disturbing, right? Bastard teachers. All teachers are bastards. That's right. All right. Okay. So anyways, I'm trying to tell you that I believe the market is very Newtonian. It's very mechanical. This does this, so that does that. Right? And if this is twice as big as that, then the ratio is going to be 2 to 1, and this is going to have twice as, and this is going to have half, and this is going to do this. But it all makes sense. It's not a random walk. It's more like you know, $100,000 watch complication, right? That's how I interpret it. I might be wrong, but this is how I think of it. So it goes back to the comment that I think Mike had it, like, you know, maybe it came early this year. No, because now you're throwing in randomness, like, oh, this could just change, like it might snow in July. No, that would make it random. It's not random. Okay, so there is something else that's a variable that maybe I'm missing, or maybe I should think of, or whatever. So that's sort of my logic. So, but I haven't had time. Nah, it's not North Korea. Turn your TV on. So I don't have an answer, but it is something I'm thinking of. Okay. And a lot of the commodity currencies are weak too. So am I missing something? Because I feel the macro conditions are improving. So maybe we're just in a trough, is what I'm thinking. Because analyzing my own, you know, plans, let's say my macro plans, very often I'm way too early. Okay, meaning, you know, I will think of something and I'll say the market will change, and it takes the market a lot longer than I understand. I don't know. So like, I'll disagree with almost everybody on TV. All these experts come in, they're like blah 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 blah, and I'm like, that's just not true. This other thing is going on. That's not really what's important. And all the talking heads are talking about the stuff that I'm like, you know what? That's not the right thing to be focused on. It's these other things, right? And for some reason, I'm the idiot disagreeing with all the experts. And then all of a sudden, one day, snap! All the experts are talking about this crap I was talking about 6 months ago. And all of a sudden, the market's moved, and I'm a little slow because I'm like, well, I've been waiting and waiting. You know what I mean? And all of a sudden, I'm waiting to the point where I start doubting myself. So I don't know. I feel like macro conditions are improving, and this should shift sort of money flow a bit. And it seems that the shift hasn't quite happened yet. And I don't get it. I don't understand why. It should be. But, you know, my model or whatever. So, right? Is that right? Katie says, like, things are suffering. Things here are awesome. Right? Things here in my neighborhood are awesome. You go to restaurants Friday night, Thursday night, Wednesday night. Not joking. You go to, right? So there near me, there's an Outback Steakhouse. G'day, mate. Right? G'day, y'all, as they say here in Georgia. I'm like, dude, don't mix that up. But that's kind of like, isn't that where like upper middle class people go? Like that's a steakhouse for poor people, right? Like you go in here and like, dude, people are paying $40 for a steak here? For this? Really? Right? So I'm like, wow, that's a lot of money. This is where, but it's not a real steakhouse. Like, oh my God, this is not a real steakhouse. But people are dropping $40-50 a head just on their entrees. Like, wow, really? So there's my blueprint for rich poor people. Yeah, on a Wednesday night, the place is packed. Packed. There's no parking. There's a line outside. So I'm driving around. I'm like, for Outback freaking Steakhouse, really? Driving by, like, wow, right? So I look at things like that. I'm like, well, all those guys have disposable income, right? What makes your disposable income? Let's do a formula. Let's do a formula. Income. Oh, income is Y. Why is it Y? Because Y is GDP. Why is GDP real GDP? Why is Y real GDP? Because it's all aggregate expenditures, which is part of the aggregate demand curve. So at a certain price level, there's going to be a certain demand, and that would be all expenditures, and it's complicated. All right, so income, but we want disposable income. Disposable income equals what? Income minus taxes plus transfer payments. What's a transfer payment? You're retired and the government sends you $1,000. Okay, imagine that. The government sends you, you're retired now, sends you your $1,000 check every month. How much of it are you going to spend? Well, it depends on your marginal propensity to consume, right? Right? And your marginal propensity to save, which would equal 1. So anyways, what if people felt, wait, I got to do it this way, don't I? Y minus T plus TP. Okay, so your income minus your taxes, okay? Bear with me here. The Senate and Congress pass a tax cut bill. It's sent to the President of the United States of America, Donald J. Trump, and he signs it. It goes into law. Taxes next year go down. Ooh, let's add to it. Disposable income could be your expected income. It'll work, still works. Your expected income in the future, okay, minus taxes, which would be you're thinking of the future. So if your taxes go down, what happens to your disposable income? It goes up. So if your marginal propensity to consume is 80%, you figure you're going to have $1,000 more a month because you're saving in taxes, or $1,000 more a year if you want, because you're saving in taxes. You're going to spend $800 more, and you're going to save $200 more per year. And that would increase GDP. So disposable income is important to GDP. Okay? So I don't, right? So that's my view. I'm looking around, I'm like, look at all these a-holes. Their disposable income must be high. So, oh, you know what I forgot? Household wealth. All right, anyways. So imagine now household wealth is going up. So this is why owning is important. Your house has gone up 10%. You're gonna feel like spending some money. You're like, hey, let's go to Outback Steakhouse. Boom, right? What if you get a raise at work? Boom, Outback Steakhouse. Trump lowers your taxes. Boom, Outback Steakhouse. You see what I mean? All this kind of stuff affects you. So let's we'll wrap this part up. It's not random. You can't just say, oh, well, maybe this year it happened in October and not January. No, I don't buy that. There's something else going on. Okay. So what? It's a holiday. So let me tell you something. Technical analysis is going to be mediocre at best today. It's going to be okay around, you know, this 8 to 10 a.m. period. But then after that, your technical analysis is going to become very much less reliable. Okay? Tomorrow, banks are closed in the United States, which means other parts of the world may not want to trade at all either. You may possibly be the only one trading tomorrow if you trade. And that might make you an idiot. Okay? So you have to call your mom and explain the stupid idea to her first. Yeah, you know, I want to move the market, and this is my chance, Mom. Will you lend me some money? Right? Now, Friday is intern day, right? Right? Friday's intern day. Associate day, where the low stackers are going to try to trade. You're going to get some foreigners. Maybe a crazy billionaire out of Malaysia is going to try to move the market. But so there's a rule on Wall Street. You can't be closed 4 days in a row. They made this up. It's important to somebody for some reason. But that person died probably 30 years ago, but we still have the rule. No one really knows why. Who cares? But Wall Street can't be closed for 4 days. So if they're closed Thursday and Friday, or Thursday and Saturday, Sunday, you see what I mean? You can't be closed Friday. So the way they get around this is it's only open a half a day. So once again, I think a lot of people are taking Thursday off. We'll just take Friday off, and then you got Saturday and Sunday, and they come back to work Monday. So I caution you. I don't believe I will be trading. Right? I know it's a do what you do what I say, not as I do kind of scenario. I don't know. But you shouldn't. How about that? You shouldn't. Or if you do, you need to be incredibly cautious. But trading on Thursday, by definition, wouldn't be incredibly cautious. Now, there might be something happening. What if the yens do take off when the market's thin? So, how about this? On Friday, I'm going to try to resist trading, but I might do it anyways. Right? Like, I'm going to try to resist. But if those yens take off, you know, yeah. Yeah. Yeah, I'm supposed to be on the beach. I'm going to be at a cigar bar with my laptop. Probably with a Davidoff Nicaraguan. Lorraine says, I've had some good trader. Yeah. Right, because London is still open if you got to get jam a trade and all that kind of stuff. It's true. And also have some desk-to-desk things that might go down. So I might be doing non-currency trades, and I would be with like bankers and lawyers in London over the weekend. And if that goes down, like again, I might need to jump on a plane at Thanksgiving and like fly to some part of the world. I don't know if that's going to happen. I really don't. I might find out in the next 20 minutes. I might find out later today. I might find out tomorrow, but you know, I got some beeswax, some beesness going on. So if it all goes down, you know, London is going to be open, so I can do business in London. You can do some currency trading. London will be open. But what I'm trying to tell you as an amateur retail trader, you rely on technical analysis almost primarily. All right? And you are not big enough to move the market. Those are two truths. So, what if the market doesn't move as you predicted? You end up losing money, especially since your stops are like 15 pips away, right? So if they're not going to move the way that you predict, that means your risk has gone up because you need other people to move the market for you. So if you think the market's going to go up, your trade ain't going to move it up. You need more people to pile on and drive it up. But those guys are not around. They're on the beach. And you're like, no, I got to work today. Today's my big work day. I'm gonna double down today when no one else is working. Right? So it's like, yeah, you gotta, but like as Lorraine says, I will most likely, for almost 99% chance I won't trade Thursday. Friday, I'm gonna try not to, but dude, if they're moving, you can't stop me. Loaded like a freight train, live like you never came. Feeling like a space brain one more time tonight. But yeah, fat finger. Yeah, I'll fat finger it for us. So I don't know. You never turn your back on the market. So Lorraine is right. But I will try. Oh, I will try. It's. I did a speech a long time ago, and I kind of gotten. I felt like I crossed some lines, but I compared it to the last temptation of Christ. I should be careful here, but anyways, you know, and I'm walking down the marketplace, and there's temptation to the left and temptation to the right. There's drinking and alcohol and whores, and Jesus has to walk the righteous line, right? So I'm trying to be good. I'm trying to go on vacation with my family. I'm trying not to trade. Oh, but if those yens move on Friday, oh, I'm going to be tempted. I'm going to be tempted, and I will try to be strong. So, yes, MRC's figured it out. So I'll see you on Monday. Peace on earth. May the pips be with you. Look at this. Look at this. I'm glowing. Good timing on the whole biblical thing. No! So peace on earth. May the pips be with you. May your profits be above average. I'm the golden child. I'll see you in the palm trees, huh? Nice. It's my halo, man. It's my halo. Beep, beep, beep.